In this video, we're going to talk about the top 10 ETFs and mutual funds for 2022. We're also going to discuss why index funds are some of the best investments for building wealth. An index fund is a type of investment product that is either a mutual fund or an exchange-traded fund, ETF, and is based on a predetermined basket of equities or indexes. This index may be generated by the fund manager or by a third party, such as an investment bank or a brokerage firm. These fund managers then imitate the index, establishing a fund that looks as close to the index as possible while without actively managing the fund. As companies are added and removed from the index, the fund manager mechanically duplicates those changes in the fund. Here's everything you need to know about index funds, including 10 of the top ones to consider adding to your portfolio this year. Why are index funds a popular investment? Index funds are popular among investors because they guarantee ownership of a diverse range of equities, more diversification, and lower risk, all at a reasonable cost. As a result, many investors, particularly beginners, believe that index funds are preferable investments over individual stocks. Attractive returns. Major indices, like all stocks, will fluctuate. However, over time, indexes have produced solid returns, such as the S&P 500's long-term annual return of roughly 10%. That doesn't imply index funds make money every year, but it has been the average return over long periods of time. Diversification. Index funds are popular among investors because they provide quick diversification. Investors can buy a diverse range of businesses with a single investment. One share of an S&P 500 index fund gives ownership in hundreds of companies, whereas one share of a NASDAQ 100 fund provides exposure to approximately 100 companies. Lower risk. Investing in an index fund is less risky than holding a few individual stocks since they are more diverse. That doesn't imply you can't lose money or that they're as safe as a CD, but the index will often move far less than an individual stock. Low cost. With a low expense ratio, index funds can charge relatively little for these benefits. For larger funds, you may have to pay $3 to $10 a year for every $10,000 invested. When it comes to index funds, one of the most crucial aspects in your total return is the cost. While certain index funds, such as the S&P 500 or NASDAQ 100, allow you to own firms from multiple industries, others own only one industry, country, or even investing style, say, dividend stocks. Our top 10 ETF index funds from various companies that track the number of broadly diversified indices, including some of the lowest cost funds available on public marketplaces. One of the most critical aspects of your total return when it comes to index products like these is cost. Here's our top 10 list that includes 3 mutual funds and 7 ETFs. Number 1. Fidelity Zero Large Cap Index, FNLX. The Fidelity Zero Large Cap Index Mutual Fund is part of the investment company's foray into mutual funds with no expense ratio, thus its zero moniker. The fund doesn't officially track the S&P 500, technically it follows the Fidelity US Large Cap Index, but the difference is academic. The real difference is that investor-friendly Fidelity doesn't have to cough up a licensing fee to use the S&P name, keeping costs lower for investors. Number 2. Shelton NASDAQ 100 Index Direct, NASDAQs. The Shelton NASDAQ 100 Index Direct ETF tracks the performance of the largest non-financial companies in the NASDAQ 100 Index, which includes primarily tech companies. This mutual fund began trading in 2000 and has a strong record over the last 5 and 10 years. Expense ratio, 0.5%. That means every $10,000 invested would cost $50 annually. Number 3. Invesco QQQ Trust ETF, QQQ. The Invesco QQQ Trust ETF is another index fund that tracks the performance of the largest non-financial companies in the NASDAQ 100 index. This ETF started trading in 1999, and it's managed by Invesco, a fund giant. This fund is the top-performing large-cap fund in terms of total return over the 15 years to September 2021, according to Lipper. Expense ratio, 0.20%. That means every $10,000 invested would cost $20 annually. Number 4. Vanguard SP 500 ETF, VOO. As its name suggests, the Vanguard SP 500 tracks the S&P 500 index, and it's one of the largest funds on the market with hundreds of billions in the fund. This ETF began trading in 2010, and it's backed by Vanguard, one of the powerhouses of the fund industry. Expense ratio, 0.03%. That means every $10,000 invested would cost $3 annually. Number 5. SPDR S&P 500 ETF Trust, SPY. The SPDR S&P 500 ETF is the granddaddy of ETFs, having been founded all the way back in 1993. It helped kick off the wave of ETF investing that has become so popular today. With hundreds of billions in the fund, it's among the most popular ETFs. The fund is sponsored by State Street Global Advisors, another heavyweight in the industry, and it tracks the S&P 500. Expense ratio, 0.095%. That means every $10,000 invested would cost $9.50 annually. Number 6. Vanguard Russell 2000 ETF, VTWO. The Vanguard Russell 2000 ETF tracks the Russell 2000 Index, a collection of about 2,000 of the smallest publicly traded companies in the US. This ETF began trading in 2010, and it's a Vanguard fund, so it focuses on keeping costs low for investors. Expense ratio, 0.095%. That means every $10,000 invested would cost $10 annually. Number 7. iShares Core S&P 500 ETF, IVV. The iShares Core S&P 500 ETF is a fund sponsored by one of the largest fund companies, BlackRock. This iShares fund is one of the largest ETFs and it tracks the S&P 500. With an inception date of 2000, this fund is another long-tenured player that's tracked the index closely over time. Expense ratio, 0.03%. That means every $10,000 invested would cost $3 annually. Number 8. Schwab SP 500 Index Fund, SWPPX. With tens of billions in assets, the Schwab SP 500 Index Fund is on the smaller side of the heavyweights on this list, but that's not really a concern for investors. This mutual fund has a strong record dating back to 1997, and it's sponsored by Charles Schwab, one of the most respected names in the industry. Schwab is especially noted for its focus on making investor-friendly products, as evidenced by this fund's razor-thin expense ratio. Expense ratio, 0.02%. That means every $10,000 invested would cost $2 annually. Number 9. Vanguard Total Stock Market ETF, VTI. Vanguard also offers a fund that covers effectively the entire universe of publicly traded stocks in the US, known as the Vanguard Total Stock Market ETF. It consists of small, medium and large companies across all sectors. The fund has been around for a while, having begun trading in 2001. And with Vanguard as the sponsor, you know the costs are going to be low. Expense ratio, 0.03%. That means every $10,000 invested would cost $3 annually. Number 10. SPDR Dow Jones Industrial Average ETF Trust, DIA. You don't have a lot to choose from when it comes to ETFs tracking the Dow Jones Industrial Average, but State Street Global Advisors comes through with this fund that tracks the 30 stock index of large cap stocks. The fund is definitely one of the earlier ETFs, having debuted in 1998, and it has tens of billions under management. Which one of these ETFs or mutual fund would you like to add to your portfolio? Let us know in the comments below. For your convenience, we've added the full list of our top 10 ETFs and mutual funds in our description below. Thanks for watching and don't forget to subscribe to our channel for weekly investing videos.